Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Sedan. This week, we're covering the proposed changes to update Treasury Department Circular 230, which governs practice before the IRS. Sign up for Speidel's quarterly federal tax update webinar, and you'll get reliable and pertinent updates on trending tax topics. Get details on the subscription webinar series and register for a full year of updates or just a single session at speidel.com under webinars. As we do each year, this podcast will be on hiatus through tax season, and you'll be receiving the Tax Season Tribune, which is a short weekly newsletter that has lighter fare than our regular content. The podcast will resume for its fifth season on April 22nd. The Department of the Treasury has issued new proposed regulations relating to Treasury Department Circular 230, which governs practice before the IRS, and which was last revised in 2014. In 2011, the IRS created the Registered Tax Return Preparer designation and subjected them to the requirements of Circular 230. However, the Loving decision rendered the 2011 Circular 230 amendments unenforceable against registered tax return preparers. The latest proposed regulations eliminate the rules regarding registered tax return preparers. Additionally, the proposed regulations clarify that practice before the IRS includes the preparation and submission of income tax returns, but only when such preparation and submission is in connection with representing a client in a matter before the IRS. Tax professionals are currently allowed to charge contingency fees for services rendered in specific situations. But Circular 230 at Section 10.27, Fees, prohibits contingent fee arrangements for services rendered in connection with any other matter before the IRS, including the preparation of original returns, amended returns, and claims for refund or credit. However, the 2014 case Ridgely v. Liu held that the IRS didn't have the authority to treat the preparation of ordinary refund claims as practice before the IRS. Therefore, the IRS cannot prohibit charging contingency fees for ordinary refund claims based on their authority to regulate practice before the IRS. The proposed regulations would remove Section 10.27 from Circular 230, but would expand the definition of disreputable conduct under Section 10.51 to include both charging contingent fees in connection with the preparation of an original or amended tax return or claim for refund or credit, and charging fees that under the facts and circumstances are unconscionable. By expanding the definition of disreputable conduct to include charging contingency fees, the IRS can continue to limit the ability of tax practitioners to charge contingency fees for most tax preparation services. Proposed Section 10.21 expands the current requirements regarding noncompliance by requiring practitioners to explain the actions clients should take to correct a noncompliance, error, or omission. Failing to do so is defined as disreputable conduct that can lead to the practitioner being disbarred from practice before the IRS. Additionally, proposed Section 10.21 instructs practitioners to consider whether they can continue to meet their obligations to exercise diligence as to the accuracy of tax returns if the client refuses to take corrective action during the course of the practitioner's representation. The proposed regulations also expand Section 10.33 regarding best practices and 10.35 regarding the use of technology to store sensitive information. We discussed the proposed changes in greater detail in the February 2025 issue of Speidel's Federal Tax Letter. To download a sample issue and get details on this monthly subscription, go to speidel.com and click Publications. That's all for this week. Have a productive tax season, and Speidel's Federal Tax Minute will return on April 22nd.